The world is watching Argentina today, as President Javier Milei's La Libertad Avanza party scores a decisive midterm victory. Investors, both local and global, see this as a powerful endorsement of Milei's pro-market reforms, sparking a dramatic rally in Argentina's currency, stocks, and bonds. After years of instability and inflation, this surge signals a potential turning point for the economy. Milei's controversial shock therapy has been tough, but the election result gives him a renewed mandate to push forward. The landslide win arms his government with the legislative muscle needed for further deregulation, privatization, and fiscal discipline. For the first time in years, Argentina's markets are echoing a sense of hope and a clear path forward. Monday's market reaction was nothing short of explosive, an energy that rippled through every corner of Argentina's financial world. The day began with a sense of anticipation, as investors and analysts braced for what many hoped would be a turning point. Argentina's peso jumped over 8%, a dramatic reversal after weeks of relentless decline. This sudden surge in the currency's value caught many by surprise, signaling renewed faith in the country's economic prospects and a break from the pessimism that had gripped the market. Sovereign bonds soared as well, with yields dropping below 10% for the first time in months. The price of key bonds reached their highest levels since President Milei took office, reflecting a wave of optimism about Argentina's ability to meet its financial obligations. The Merval stock index surged 20% at the open, a remarkable leap that underscored growing confidence in Argentine companies. Sectors like banking, energy, and industry all saw significant gains, as investors bet on a brighter future. Investors now believe Milei's government can not only stabilize the currency, but also honor its debts and implement much-needed reforms. This shift in sentiment is fueling a new wave of investment and hope. Before the election, fear and a flight to safety dominated the mood. People were anxious, pulling money out of the market and seeking shelter in safer assets. Now, confidence and risk appetite are making a strong comeback, changing the atmosphere on the streets and in the markets. The broad rally is more than just numbers on a screen. It's a clear sign of faith in Milei's pro-business policies and a widespread belief that the risk of economic collapse has faded, at least for now. Investors who once sat on the sidelines, wary of instability, are now rushing back into the market. They're betting on a sustainable recovery, eager to be part of Argentina's potential turnaround story. The numbers aren't just statistics. They represent a powerful shift in sentiment, a collective sigh of relief, and a renewed sense of possibility for the country's future. For Argentina, the worst of the uncertainty may finally be behind. As optimism spreads, both at home and abroad, the country stands at the threshold of a new chapter, one defined by hope, resilience, and the promise of recovery. To grasp the scale of the rally, you have to understand the anxiety gripping Argentina before the vote. Fears of a Peronist opposition win sent the peso tumbling, as Argentines scrambled to buy dollars and the central bank burned through reserves. Net reserves were deep in the red, and even a $2 billion U.S. intervention barely held the line. A Milei loss could have triggered a full-blown currency crisis and a return to failed economic policies. Investors worried a weakened president would mean policy paralysis and another debt default. The election was a make-or-break moment, with the specter of hyperinflation and gridlock looming. That's why Sunday's result was so consequential. It averted disaster and restored hope. The relief in the markets is a direct response to escaping this bleak scenario. Milei's party secured nearly 41% of the vote, far outpacing the Peronists. This significant lead not only highlights the public's desire for change, but also sets the stage for a new political era in Argentina, and delivering a clear mandate for reform. The enthusiasm among Milei's supporters is palpable, reflecting a collective hope for a brighter economic future. Investors see this as the green light for Milei to push ahead with tough economic changes. The financial markets have responded positively, with a surge in stock prices and increased investor confidence. The victory gives his government the legislative support needed for labor, state enterprise, and trade reforms. These reforms are expected to modernize the economy and attract foreign investment. Political risk has dropped sharply, making Argentina a more attractive destination for international capital, rescuing the government's economic program from the brink. The newfound stability is a welcome change for both local businesses and international investors. Fears of a disorderly devaluation have subsided, and another inflation spike have eased. The peso has stabilized, and inflation rates are showing signs of improvement. The government now has room to manage the exchange rate gradually, not in panic. This controlled approach is crucial for long-term economic health. Above all, investors crave predictability, knowing that the rules won't change overnight. Milei's win brings stability to a country long plagued by policy swings. This stability is essential for fostering a conducive environment for economic growth. The rules of the game feel less likely to change overnight, providing a sense of security for investors. That's why capital is flowing back into the country, lifting stocks, bonds, and the peso. The financial markets are optimistic about the future. The market's message is clear. Argentina's reform path is finally secure, and the country is on the road to recovery. The positive market reaction echoed all the way to Washington, D.C. The U.S. has quietly backed Milei's reforms, seeing them as a remedy for years of mismanagement. U.S. Treasury Secretary Scott Bessent quickly voiced support, signaling to global investors that America stands behind Argentina's direction. In the tense pre-election weeks, the U.S. reportedly provided $2 billion to help stabilize the peso. The strong election result validates this support and reduces the need for emergency bailouts. The U.S. endorsement boosts international confidence, especially with the IMF, which has a major program in Argentina. The IMF has supported Milei's fiscal discipline, and the election result will smooth future negotiations. With Washington and the IMF aligned, Milei's reforms have a powerful external anchor. International investors now see Argentina as less isolated and more credible. Financial analysts are overwhelmingly positive about the election's impact, describing it as a pivotal moment for Argentina's economic trajectory. Many believe this marks a turning point, with renewed hope for stability and growth. The mood among market watchers is noticeably more upbeat, as they see the election as a catalyst for long-awaited reforms. Thierry Larose of Vontobel says Argentina's reform momentum is back, and the risk of a major devaluation is off the table. He points out that investor confidence is returning, and that the government's new mandate gives it the strength to push forward with difficult but necessary changes. According to Larose, this renewed momentum could help Argentina regain access to international markets and attract much-needed foreign investment. Carmen Altenkirch at Aviva Investors expects locals to start selling dollars and buying pesos, helping rebuild central bank reserves. She notes that this shift in behavior could signal growing trust in the local currency, which is essential for long-term economic recovery. Altenkirch also highlights that a stronger peso would make imports cheaper and help tame inflation, benefiting everyday Argentines. Daniel Landsberg Rodriguez notes the government now has time and political cover to act on its own terms, not under market duress. He emphasizes that this breathing room is crucial for designing and implementing reforms that are both effective and sustainable, rather than rushed responses to market panic. Still, experts warn that delivering on reforms will require sustained political will and coalition building. The path ahead is complex, and success will depend on the government's ability to unite different factions and maintain public support. Without broad consensus, even the best-laid plans could falter. Some exchange rate adjustment is expected, but it will be gradual and controlled. Analysts agree that a measured approach will help avoid shocks to the economy and protect vulnerable sectors. This careful management is seen as a sign of the government's commitment to stability. Investors anticipate a more flexible exchange rate system in the future, once the economy stabilizes. They are watching closely for signals of further liberalization, which could boost competitiveness and encourage more international trade and investment. The consensus is clear: the election win is a major battle won, but the war for Argentina's economic future is ongoing. There is a sense of cautious optimism, as many recognize that real change will take time and perseverance. The market's optimism is real, but so are the challenges ahead. Experts agree that while the outlook is brighter, Argentina's journey toward lasting prosperity will require resilience, smart policy choices, and the continued support of both the public and the international community. Despite the euphoria, Argentina's economic challenges remain daunting. The country faces $18 billion in foreign debt payments over the next year, with reserves still depleted. The election win makes refinancing easier, as investors are more willing to hold Argentine debt. Fiscal discipline is crucial. Milei's spending cuts and primary surplus have impressed markets, but more reform is needed. The real solution is growth, deregulation, trade, and private investment must unlock Argentina's potential. The government must use its mandate to lock in gains and push further. Cutting alone won't bring prosperity. Only sustained growth will make the debt manageable. The market's optimism is a bet on this growth, but the government must deliver. The challenge now is to turn hope into lasting results. The path ahead is clearer, but not easy. Milei's team must capitalize on market optimism by adjusting the exchange rate policy to better reflect inflation. Deeper reforms, modernizing labor laws, privatizing state firms, are now politically possible, but will test Milei's coalition-building skills. Attracting long-term foreign investment is essential for sustainable recovery. Argentina needs more than hot money. It needs global companies to build, hire, and invest. A stable legal framework and respect for property rights are key to attracting this capital. The government must balance fiscal discipline with real improvements in people's lives. If reforms don't benefit ordinary Argentines, public support could vanish. The challenge: turn a political mandate into shared lasting prosperity. For ordinary Argentines, the market surge means more than numbers on a screen. A stronger peso could slow the relentless rise in prices, offering relief from years of inflation. Renewed economic confidence is the first step toward job creation and higher wages. The government's strengthened position means less reliance on printing money, the main driver of inflation. While austerity has been painful, it's a better alternative than economic collapse. The election result is a story of hope, a collective bet on a different future. The market's vote of confidence, paired with a clear political mandate, offers the best chance in a generation to break the cycle of crisis. For Argentines, it's about hope for a stable currency, steady work, and a better life.